And we're back with more News Talk Saga 960. So very glad that you could join us on this edition of the Mark Petrone Show. Well, it's that time again when Benjamin Dichter takes us through the paces as far as cryptocurrencies go. And it's interesting because normally we don't spend a whole lot of time talking about the price of crypto at any given time. It is what it is. Some people believe it's going to continue to climb, possibly to $200,000 and $300,000. I've seen some estimates that say that it's going to be $100,000 by the end of 2022, but I heard some of those same estimates at the end of 2021, and we're not there, not even close. But the price of Bitcoin, for instance, has almost doubled since the start of the year. I was trading around $26,000 per coin when we changed the calendar to 2021. Now it's what, about $51,000 USD, obviously. And so the question is, where is it headed for 2022? I mean, you could also look at other things like gold and silver. Some people are suggesting big years for those commodities. And so we're going to bring in Benjamin to look into his crystal ball. I know he's not going to. He's going to take the coward's way out because he's not going to give us the price because he doesn't want to be humiliated at the end of the year when he's wrong. But then again, he could be absolutely right. Welcome to the show once
How you
again, Benjamin.
doing?
Excellent. Thank you. All right. So a lot of people are looking at their holdings, their crypto holdings, and go, okay, maybe I got a few $1,000s invested in Bitcoin, maybe less, maybe more.
Mhm.
Where is it going to be at the end of 2022? Now,
What?
let me guess. You probably think, don't say, don't even bother with the day to day, with the minute by minute changes in cryptocurrencies. It's always going to happen. It's going to continue moving. But, given that it's the end of the year, you have any thoughts about this?
Yeah, well, I always talk about let's adjust our time horizon and let's not look day to day. So this is kind of for me the threshold that I look at is okay. Let's look at year to year, right? And anytime you look at Bitcoin, the price year to year, especially towards the end of the year because of buying cycles and whatever, that's where you see the real story. And the fact that today we just crossed 51,000 again after it's dipped a little while, and the recency bias that people have that, oh, Bitcoin's down to 50,000. I remember a couple of years ago where 50,000 was unimaginable, right? And now everybody's comfortable with it. So, and if you look at it year over year from 2011, 12 on, you're going to see there's a regular pattern that only twice in the history of Bitcoin has it not increased above its previous previous high from the previous year, right?
Yeah, I
So
mean,
that's
between 2018 and 2019, it was down 72%. So I think that qualifies as a crash, doesn't it?
yeah, of course. But then between 2011 2012, it was up 100% and 13 5,000%. He had a little dip in 2014. It was down 50%, then up 33 the next year, 125 the next year, 1,325% in 2017. So of the in the chart that we're looking at, the years that we have, there's only two of those years that it's been down at the end of the year. Okay, but that's how you get from a $4 Bitcoin in 2011 to a 51,000 Bitcoin at the end of 2021, right?
Right. Some are suggesting that it's the growing adoption of cryptocurrencies. I mean, we talked about what's going on in El Salvador and Tonga and other areas of the world in which are adopting cryptocurrencies. We're talking about some of the buy-in, even by um, some of the major financial institutions. And
Mm-hmm.
as more and more people get into it, as more investors pile in, then the volatility may not be as bad going forward. And the possibility of a major crash, like what we saw with the 72% hit in 2018, that's unlikely as well. Do you buy the idea that the greater the buy in, the less the volatility and the less likelihood of a major crash?
Well, I think the more people buy into the platform, get educated, and start utilizing it, especially, then yeah, over time that's going to reduce volatility. But I think there's something else that right now we have this looming global economic crash with this wonderful institution called the Fed, who's all out of options at this point. It's either we go the right route of inflation and a car is a $500,000 in 2 years, or we go down the route of increasing interest rates and we collapse the economy and asset prices by 50% because our entire economy is based on asset prices now, right? So either way, all of us are screwed. Everybody. Doesn't matter what you have. If you have cash, you have a house, property, investments, whatever, all of us are going to be screwed in the next few years. Our standard of living is going down because of these wonderful people we've elected in governments. It's not just one person, it's multiple, right? So is Bitcoin going to go down as well? Yeah, probably. Everything's going to go down. People are going to be scrambling to get money because they're going to be, especially if these interest rates go up over the next couple of years. What did they say? They announced 6 rate hikes, I think it is, over 2022 and 2023. So we know there's a whole lot of hurt. So I'm not terribly worried about, is Bitcoin going to go down 50% or 20%, whatever. I think what you'll see is there's going to be, and maybe I'm wrong, but I think there's going to be a major implosion of the legacy economy. Bitcoin is, and crypto is going to go down as well. But all right, so if Bitcoin goes down year over year, 10%, but the stock market is down 50%, or the price of the value of your house is down 50%. Well, then if you had some money in Bitcoin, that kind of, helped you stay some of the hurt. You know what I mean?
Mm. Okay. Well, let's have a look at one of the links that we're going to have to look at. Senator Cynthia Lummis reveals her plans for cryptocurrencies for 2022. You want to talk a little bit about that? This is she says there's plans for cryptocurrency overhaul, and so are we talking regulatory overhauls here? She has proposed new regulatory a new regular entity that would be focused on cryptocurrencies. The focus of legislation remains on stablecoin regulation and consumer protection. How do you see this going forward, maybe in 2022 or 2023?
I think it's all good. I mean, Cynthia Lummis is very, very bullish on Bitcoin and tells everybody to get into the Bitcoin space and allocate a little bit of your portfolio into it. I think what's nice to see is we see a lot of shenanigans go on with people in the SEC who are utilizing the lack of regulation to exploit a lot of money out of a lot of projects. And as we discussed once before, these regulators who work for the SEC, they'll work there for a couple of years, and then they'll go and become a consultant for their own company and consult against the very legislation that they passed themselves, right? Like it's extremely corrupt. So I think the fact that she wants to take the power of crypto regulation away from the SEC, an institution which she describes doesn't understand the digital asset space, and have a regulatory body that does know and specialize in the digital asset space, that is a huge win for Bitcoin. Because one of the things that the major investment firms have been looking for is, and the Winklevosses have been on about this for years, is if you want the market to grow exponentially, we need some regulatory framework, right? At least that way, everything's out in the open. Everybody knows what the rules are, because right now it's all murky. The SEC can go after XRP and say they're a security, but then another project, no, they're not a security. Why? Well, we don't know. It's just that's what we decided. So this is huge. This is really good that she's going down this road.
All right. Well, there's also talk of Bitcoin-backed bonds. This is one of the things when I talked about buy-in, and that maybe the more, if you want to say mainstream, the cryptocurrency gets, then the less volatility. The more people get into it, then it just becomes more stable. I mean, it's like the difference between buying some blue chip stock and buying some penny stock. I mean, the penny stock's probably going to be more volatile, than say a blue chip stock like Apple or something like that. And so now there's talk of Bitcoin backed bonds, and that even Goldman now is kicking the tires on the idea of crypto collateral. And so these are the types of things that are being talked about as we end 2021 and look ahead. I don't know. Do you like the idea of crypto bonds? I'm not even sure. I mean, a bond is debt, right? A bond is when you're buying debt and you're expecting a return in the form of interest payments on your investment. How would it work with crypto? Any idea?
Well, similar to what El Salvador has done with their crypto bond. So they're issuing a bond and they're expecting a return on their investment over time based on the historical data they have of Bitcoin, and they're going to leverage it into a bond. I mean, and that's fine. There are some people that will be interested in that. My only concern is, we discussed at some point in the past that, as much as Bitcoin is verifiable, it's on a public blockchain, all that sort of stuff, humans are crafty and they will come up with some sort of derivative product. And I think this is just the first step of the financial industry doing what degenerate gamblers do. All right, whatever. They're gonna create a bond, and then they'll have a derivative of the bond, and then they'll have swaps of the bond, and the same nonsense as always. For me, what I care about is the asset. In terms of buying a bond versus Bitcoin, because it's so different than other traditional assets, I don't understand why. Just buy the asset. Just buy the Bitcoin. That's it.
Okay. And so do you see continued buy-in to crypto as we head into 2022? I mean, it stands to reason that is going to happen. Or do you see that maybe people are going to get into the ETF? All right. So people have been maybe dipping their toe in, getting into the ETF that's been out there. I don't know how it did over the course of the year. I guess we could certainly have a look at that. This story that was written in Zero Hedge, other countries are likely to look into how they too can get money without having to deal with the rapacious bankers at the IMF. Okay, so they're speaking about El Salvador's move, despite
Mm-hmm.
the threats by the IMF that they better not get too heavily into crypto. The story is, according to a report from CoinDesk, Goldman Sachs doesn't get any more establishment than that, and a handful of other tier one US banks are figuring out how to use Bitcoin as collateral for cash loans to institutions. That, according to three people familiar with the plans. Wow, collateral. Okay, so that means that if I want a mortgage, and they're looking at my viability to pay off my debt, they're going to look at crypto as, oh, that's a legitimate asset. And you've got $20,000 worth of cryptocurrencies. Well, we can factor that into our assessment of you as a worthy risk for a mortgage. What do you think?
It's been going on for a while. That's why the company that we have a promo with, BlockFi, and there's a link in the description of this video on YouTube, where you can earn interest up to 9.5% on certain stable coins, and I think it's 4.5% on Bitcoin, if I'm not mistaken. But one of the other services they have is they will lend you money and use your collateral, your crypto's collateral, your Bitcoin as collateral. That's become very popular, and they're not the only company who's done that. There's a number of companies do it. There's one specifically in Canada, I can't remember, that does it. And the reason is because, unlike the legacy banking system, everything in Bitcoin, the entire thing is on an open public ledger. It's a pristine asset. It's considered property under U.S. law, according to the IRS. So yeah, of course. Why, if you can take out a collateral loan against your home, which is property, then why wouldn't you be able to take a collateralized loan against your Bitcoin, which is property? That's the theory behind it.
Okay, so you're loaning based on, so if you have, say, $50,000 worth of crypto and you want to buy cash against that, then what? BlockFi will lend you. Well, okay, well, based on our calculations, we can lend you $15,000.
Yeah, I think they lend up to 50% of the value
Oh, okay.
of your holdings, and that's kind of where we're going. It's the reset versus the legacy system, where everybody's, these banks are borrowing money and gambling like crazy, whatever. Well, this whole DeFi space that you see, you hear this term frequently, and it's essentially the financial markets in the crypto space utilizing crypto assets, right? But the idea is there's no over leveraging. You're only borrowing. You can only borrow up to 50% of your holdings. But if people are buying into and have been buying into Bitcoin for an extended period of time, they have a large number of assets. Then, well, now you can borrow against it. So everything is going to be. We're going to go from uncollateralized loans in the legacy system, which, as we know, so much of the financial system are uncollateralized loans. We're going to switch over to where all loans are going to be collateralized, at least in the digital asset space.
Well, that looks to me like you can buy crypto on margin, because if you're going to give me a loan based on how much crypto I own,
Mm-hmm.
then I'm going to take that 50% and buy more crypto, and then take a loan,
Yeah.
on that crypto. You know what I'm saying? Like,
Wait.
so I could leverage myself up the yin yang here, based on the amount of crypto that I have, the amount of borrowing that I can do based on my current assets, and end up owning a lot more crypto based on the money I have borrowed. So that's just basically buying on margin, isn't it?
Well, kinda. I mean, what you're talking about, if you do, 2 or 3 deviations from the original value, that's what's called yield farming, and that's what banks do, by the way. This is how banks get into trouble because that's what they do. So what people they've decided to do, screw the banks, we're just going to do the same thing they do, but we'll do it in a digital space. But remember, we discussed last time when the market dipped to 47,000, I think it was, dipped, and we were talking about all these over leveraged hands being shaken out of the market. That's why. But remember, there's no margin calls. If you borrow you borrow 50% of the value of your crypto holdings, and the asset tanks, I don't know what the threshold is, it changes depending on the percentage, then you just get liquidated. They see that you hand over your Bitcoin, that goes to the institution, and there you go, right? Um,
They're loan sharks.
what are banks? What are banks? They're loan sharks that are bankrupt. That's the difference, right?
Yeah, okay. I mean, that's, to me, that sounds like a recipe for a crash, but but you know,
Yeah, but I think
whatever.
when you see, like we discussed, Senator Loomis
Yeah.
wants to bring in a regulatory body to review, to oversee the cryptocurrency market. And that's what I think they want to deal with. There's a lot of people made a lot of money on yield farming over the past couple of years since DeFi was essentially created, because it's only 2 years old or 3 years old since it was even created. So this sort of regulatory body would look at, look at the exchanges that have, 120%, 120x leverage, and say, okay, this is crazy. The limit is going to be whatever threshold. So I think you'll see some of those regulations coming in there, because what they want to do is build some stability into the market. They don't mind a little bit of volatility. Volatility, the upside, everybody loves. Volatility, the downside, only a few people like. And they would like to see a more gradual paced growth of the crypto market. I mean, Bitcoin's going to go up in price just because more people will get into the market. I'll give you an example. There's a service that I use, a web service for my emails and stuff like that, because I have so many different email accounts.
I got to take a break. Can you hold that thought until I get back? Until we get back?
Sure.
Okay, so quick timeout. Back with more on NewsTalk Saga 960 and the Mark Petrone Show after this. And we're back with more on NewsTalk Saga 960. So very glad that you could join us on this edition of the Mark Petrone Show. We have Benjamin Dichter on the line. Benjamin is our crypto enthusiast. He's been working with crypto, using crypto, trading, buying. I don't think you're selling. Have you ever sold crypto for cash? I mean,
No.
are you just you're an accumulator of crypto, right?
Yeah.
Okay, so you're not going to be liquidating your holdings anytime soon.
No.
Okay, so because this is obviously a long-term play for you.
Yeah.
But we were talking about the idea that you can borrow cash now,
Yeah.
based on your current holdings of cryptocurrency. So if you have, say, $10,000 worth of Bitcoin, well, if you're invested through a certain bank, crypto organization, then you can borrow up to half of that. So you can borrow $5,000. They'll give you $5,000, say USD, if you've got $10,000 worth of crypto. And so the implications of that, where, what if you use that money, borrowed money, to buy more crypto, then essentially you're buying a Bitcoin on margin. And if that's not managed properly, then, conceivably that could be, that could lead to potential collapses in a lot of people's holdings. I mean, if there's a dramatic hit to the price of crypto, which we saw it happened in 2018, where it went down like 72%. So a lot of people were, thinking that it was going to go down to zero, including, I'm sure, Peter Schiff. That was a great year for Peter Schiff.
Yeah, he did. Yeah, that was the year he said Bitcoin will never be above $10,000 ever again. That was one of his big predictions. Yeah.
Well, how did that work
Yeah.
out for you? I mean, today it's what, 51? It's at this point it's about 51,000, is it not? It's just it's around.
Yeah, but the thing we were discussing before is, the volatility of the market. So irrespective of what traders do in the cryptocurrency market, regular people are going to onboard it and going to be starting to use it. Because remember, as we discussed from the very beginning of when we were discussing on our first episode, that Bitcoin is not only a currency, it's also a bank, and half the planet are unbanked, and half the planet are going to get on board and start using it. And I can't remember what said it. Was it Peter Schiff? I think it was Peter Schiff. One of them recently said, well, you can't buy anything with Bitcoin. Well, I was explaining just before the break, there's a service that I use, a digital service. I couldn't buy their service with fiat currency anymore. You can't buy it. You have to use a form of crypto. There are 3 different web services I use. You can only, and you can use, I think, 4 or 5 different cryptocurrencies. Bitcoin, obviously, Ethereum, Bitcoin Cash, a few others. DAI was one. I think it was paid with DAI, if I'm not mistaken. But that's it. You're only going to be able to buy in Bitcoin. You can't use fiat. So that's where we're going with this. And the payment was processed with Coinbase's digital interface payment processor. And you know what that is? That is a competitor for PayPal. PayPal is fiat. Coinbase is the same service, but with cryptocurrency. That's where we're going to be in 3 years from now, where 50% of online transactions, 30, whatever, a large percentage of them, you're only going to be able to buy stuff with crypto. Because if you imagine you're in a business, you're in a global business, right?
Yeah.
Like we were discussing about advertising before. So the biggest wheelhouse for online advertising is buying, software services, because that way you can do a video and you can sell it to anyone on the planet. Well, who the hell wants to deal with a fiat currency that's exchanged to their local fiat currency? If you're in, I don't know, Mozambique, but you want to buy it, but it's in US dollars and you got to exchange and whatever, well, why not just use Bitcoin? Because that's the global currency that everybody will understand. Does that make sense?
That's an excellent point. I mean, there still is a cost to using crypto, right?
Of course.
I mean, if you make a transaction using, I don't know, Exodus, say, okay?
Mm-hmm.
And that's your wallet, and you're using that to buy whatever. You want to buy a toaster oven.
Okay.
and you want to buy a toaster oven in El Salvador.
All right.
Okay. So you're using that. The Exodus is going to take a tiny percentage of that to pay themselves, right? Because it's a company, and that's how they make money. But if it is a great way, I suppose, of saving monies associated with conversion. Oh, we got to convert your Canadian dollars to US dollars in order for you to do this. And so the bank is going to take its share of that, right? And then you're going to do the transaction. And then, by the way, there's also a UK partner. So we've got to take, this USD and convert it to, pound sterling. And by the way, so you know what I'm saying? Like if everybody's using crypto, then it makes life a lot easier, doesn't it? A lot easier.
Well, listen, as you know, have spent and still spend a lot of time in South America. And when I was initially down in Colombia after I was in Panama, you couldn't wire money to Colombia from Canada. No bank in Canada would wire money there. That's it. That's just the rule. Well, that's not a problem anymore. Okay, fine. I'll just send Bitcoin. Don't have to deal with the legacy banks. Don't have to deal with conversions and in and out and what. And also, when you price things, if you're having a web service online, or any sort of digital service you're selling it, you just price it in satoshis, which are the smaller denominations, or sats is what they're called. Then you want to buy the service. Oh, okay, it's 70,000 sats. Okay, it doesn't matter what part of the planet that person lives in. The money comes into their wallet, and they do it as they please. They convert it if they need. That's it. Makes life so
How
much
many
easier.
sats per coin does that number exist?
100 million.
100
100
million
million
sats.
per
So
Bitcoin.
if you have one Bitcoin, you have 100 million sats.
Yeah. And so this
Okay.
is why, over the long term, this I would call them the speculators, the people, the developers who've been building this space,
Yeah.
suggest over decades
Mm.
that if you have one Bitcoin, that's going to be generational wealth, because Bitcoin is now the fifth largest currency on the planet. People don't
Wow.
realize that. And it's passed everything but the five major currencies now. And now I can't remember what country it was, whatever country it was, that one sat is now the equivalent of their dollar. Well, that pace is going to accelerate over years, right? I don't remember what the total. I don't have a calculator in front of me, and I'm calculator dependent. But what's going to happen when a sat is worth 1 cent, or I don't know, $1 in 100 years, because the dollar's been inflated away, because the legacy financial system is not going to stop that. They have no choice.
Okay, so if say a US dollar one day is equal to one sat, then if you have one crypto coin, you're pretty rich. I mean, well, obviously it depends on what a dollar will buy.
That's right.
You
That's
know,
right. The one of the reports I remember reading, which was from maybe 2 months ago. Everybody, all these guys, because they're computer nerds, so they're always looking at the data and doing technical analysis and comparing it to fiat currencies and growth over the past 100 years, all that sort of stuff. They anticipate, not just one people, a number of people anticipate the value of one Bitcoin by 2030 approximately to be worth approximately $12.5 million. And the purchasing power, if the present rate of inflation, this was before COVID, but if the current inflation rate stays, you're just at your 2 or 3%, whatever, it's going to have the purchasing power of $1 million, right? So, okay, multiply that times 2 or 3 decades.
okay, and I think you and I once spoke about, and we got to wrap it up pretty soon, but
Yeah.
that if you want, there's a certain percentage or a certain number of sats that you should own that would put you in. I mean, if you look at the world population, within the 99th percentile or whatever of wealth owners, if you just had this percentage of Bitcoin. Do you remember that conversation?
Yeah. It was 0.28 Bitcoin would put you in the top 1% wealthiest people on the planet in Bitcoin terms. Because remember, there's a fixed supply, and people overlook that. They don't understand the importance of it, because we've never had a fixed supply currency of 21 million coins. And just in the past couple of weeks, we crossed over 19 million coins. So that's it. There's only 2 million left
But
to be
it's, yeah.
mined
All
over the
right,
next 150 years.
and you think they'll be mined completely by when? Is there an estimate? I think
Uh,
you've given me this
yeah, it
date before.
varies, but it's
Yeah,
approximately 2142, I think. That's where.
2142. So it's really
Yeah.
hard to mine. It's really hard to mine crypto.
Right now, it's measured in power, like electricity. It
Yeah.
costs roughly a block, which is different than a coin, is approximately $350,000 worth of energy to mine a block. So yeah, it's
How
getting up
much
there.
cryptocurrency would that give you, though? I mean, how much
Well,
Bitcoin would that give you? How much
that's
is it?
different. A
Oh, okay.
block is not valued in terms of
Okay,
currency.
so
That's just the amount
I'm
of energy.
comparing apples and oranges and stuff.
Yeah,
Okay.
exactly.
Very good. All right. Well, thank you so much, Benjamin. Really appreciate this. You want to plug something before we go?
I was at a party last night for Christmas, and the host was wearing a "Let's Go Brandon" shirt. It was great. It was the best Christmas sweater I've ever seen in my life.
Wait a minute. Didn't I send you a link about some kind of FJB crypto coin? I
Oh
thought I
yeah,
sent that to you today. So somebody is working on some kind of F Joe Biden coin.
yeah. But you know what? I saw that, and it was Steve Bannon and some guy that Steve Bannon works with, and I'm like, you already got into trouble over funding stuff with GoFundMe, and I like Steve Bannon. That's not the type of stuff that's going to make you look legitimate. That's going to give some oxygen to the criticism. I really wouldn't. I was surprised, or maybe
So
I
that's
wasn't
not going to
surprised,
help
disappointed.
that's not going to help cryptocurrencies get more popular if a guy like Steve Bannon gets in there and says, "Hey, what about say certain organizations creating their own coin? Like I'm going to throw it out there, and you can either hit it out of
Okay,
the
tell
park.
me.
Say Infowars. Say Alex Jones wanted to come up with his own coin and say, "That's it. We're in. We're all in. Buy my coin, and you can use that to buy whatever,
You
whatever."
know what? You know what I'd
Uh,
say, Mark? You know what I'd say? Just buy Bitcoin.
okay, what about the talk that what's that other one? The Chinese? Oh, no, it's not the Ethereum, or if is that Ethereum?
Ethereum.
Ethereum. What about the talk that that's going to be that's going to actually catch up to Bitcoin? Have you heard that talk?
Yeah, that's from people who are new to the market, don't understand what Ethereum is and how it works. Um, I mean, that's just pure speculation based on technical analysis. Raoul Paul does that a lot. Two different things. Bitcoin is, monetary policy. It's a blockchain for storing value. Ethereum is a supercomputer. You hear this term Web3.
Yeah.
Web3 means the entire internet will go decentralized, and that will help us deal with all this censorship stuff. So we're all worried about, Facebook censoring and all. Well, those companies are going to go by the buy sort of thing, by the side. They're not going to have the market cap that they have, and especially as things switch to becoming decentralized, that's where you get free speech platforms because they can't be regulated, just like uh, Bitcoin can't be. Well, it can be regulated, but they can't be crushed. They can't be, deleted off the platform. Odyssey is a famous one for that. There's Theta, Odyssey. There's a number of these platforms coming up. So that's what Ethereum is. So Ethereum is utilizing all these thousands of decentralized computer as one big ecosystem, one big supercomputer that you can build decentralized applications on. That's not what Bitcoin
All
is. They're two
right.
different things.
Is there an Elysium coin? Like the movie with Tom Cruise. I think that would be a cool name for a cryptocurrency. What do you
You know
think?
what? There's how many thousands? Probably. There's hot dog coin and sushi swap. And the guy who created the sushi coin walked away with like $20 million after you created it,
Is it and it's does it still trade? I mean, can you still
Yeah,
own
they
it,
set
buy
up
it?
yeah, they set up a DeFi swap exchange for it. I know what that means, but don't worry about it. But they've created some utility around it. Half the people say it's a scam. Another group of people say no, it's good and it's legitimate. That's a whole space called DeFi. That's where, if you want to buy speculative cryptocurrencies, that's how you make, 80%, 100%, 1,000% return on your money.
Okay, so if you're dealing in little known cryptocurrencies, it's like buying a penny stock and or buying a lottery ticket, right?
It's like buying a penny stock on steroids because again, it's not a stock, it's a digital asset.
Yeah.
What they're doing is they're doing what the legacy banking system does. They're putting all their money into a pool, they're lending it out, you're earning yield for lending out your money, and speculators are using that. And as we discussed, some people are leveraging up to 120x, right?
Okay.
Well,
So
when those people go bust,
yeah, you
you're
go
making
bust.
that money goes into the liquidity pool and you get it. No, you earn it back, right?
Okay, so you can make money even if they go bust.
That's the idea.
Oh
With every
man.
trade, there's somebody who wins and there's somebody loses, right? There's two people on either side of a trade,
Yeah.
but it's run decentralized through these, almost like a DAO, similar to that, but not exactly. And that's what I think we should replace our government with, but that's another story.
Maybe we could talk about that some other time.
All right.
Benjamin Dichter. All right.
All
Thank
right,
you, sir.
brother.
Appreciate that. Got to
Thank you
wrap
very
things
much.
up. And that's it for this edition of the Mark Petrona Show. Thank you so much for tuning in. Let's do it again tomorrow, shall we? Bye bye for now.